Hello, everybody, and welcome to the midweek plus three futures and commodities show. We are recording after the close here on Tuesday, September 17th, on the eve of the FOMC announcement, which is tomorrow. As always, my name's Ben Maldonado. I'm here with Barry Hederachi. Barry, how we doing?
Doing good, doing good. I was thinking, as you were announcing the FOMC, we should have had like a little drum roll soundtrack to go with it.
And a curtain drawing up, showing like the Wizard of Oz, don't pay no attention to that man behind the screen.
Perfect. Yep.
On this show, we're just going to run through, like, quickly do a bunch of different markets and say, okay, what are the levels important to look at? Because FOMC is, and these major events are sort of a perfect chance for stops to get swept on both sides. So you got to know the levels, you got to understand where the risk flips, and we're going to try and do that on today's show. So let's start with E-mini and jump right in.
All right. So the E-mini, if you guys caught the weekend show, I didn't realize we spent almost 20 minutes on the indices. So there was a lot of stuff there on the NASDAQ and the Dow, everything else. Here, I'll just keep it short. What we have is from the October low that we use often, is square off the October low in 22. We're up 270 degrees, and I had drawn up this 57.51 level last week or the week before. Well, it's just to show you the 270 level. That's where we are. And we had this 56.82 as sort of, well, it used to be resistance, and now it's support. It was resistance when we had this first pullback and we got stalled out there for a while. And now, on the last show, the weekend show, we talked about the possibility of a false break and how we would want to handle that. And of course, today we have, I wouldn't say a false break, we have a break, right, Ben?
Mm-hmm.
And it'll be false if we take out the low of today tomorrow. That will be definitely a false break, and we just start trading lower. But for now, let's talk about where we are. And FOMC, we're going to sort of treat like just an event, right, Ben? We were talking about, there are people that trade the event versus trading the technical year analysis, right?
Right, right.
So, and we kind of fall on the camp where we trade the analysis, and so we'll take it from that perspective. So, given that we made a new high, but we didn't get through the square like we normally like to see. And 56.82 is a level like we want to watch. There's a little buffer here, right? So if we get under 56.82 basis the daily, and we sort of, get weak below that, we can say, well, we have a false break at the high, meaning we're going to have a little bit more movement to the downside. Now, if we settle above 57.51, then it clearly opens up the next level
Mm-hmm.
of the squares. And I mean, if the full half square seems a little far-fetched to the moon, it's 6,100.
Yeah.
You never know, right? Things happen. But anyway, halfway there would be around 59.26. So keep that in mind. That's the level we're watching. And of course, lo and behold, we come to some kind of event, and this happens to us often. Like we come up to Friday and all the prices are stuck on some kind of level.
Mm-hmm.
When we have all this space, 99.9% of the screen is with no lines, but there's only uh, two lines that we work with, the 50% and the actual framing, like the top and the bottom of the square. And we just happen to be right at actually we came and tap the top of the top of the square. So we have to talk about it. And the talk, so Ben and I were talking a little bit earlier about how do markets respond to events, news events, Fed events on top of a square? Like, if you have the squares as a template, how do these events transpire once they get into the sort of the collective? And what we found out was, and we knew this for a while back, and squares will still work out as squares, number levels and everything will still work out perfectly, regardless of what the event type is. Right, Ben?
Oh, absolutely. And
And
you even said they act kind of like a fuse line.
Yes, they can actually fuse line. What we can do is take a look at this, and we'll try to figure out which way to, which side the weight is on, and how to look at that. So before we get going, I would say the weight is definitely to the downside. Okay, now I'll explain what I mean by that. Downside versus, well, we can't take every side. We have to kind of put the weight on one side and
Sure.
have some logical reason behind it. And if there's some kind of a inversion or blowout through there, then we have to deal with it. And we'll talk about how to deal with that. Now, the reason we talk about a square, so if you look at it here, coming off the low, just a quick, 2-minute lesson here. Coming off the low in October, you can see we have 1, 2, 3 squares stacked. And the idea is every square marks off let's say, a segment of that leg. And here, we came up to the full square. We spent the week without getting on top of it, got on top of it, moved higher to the 50% level, came back for a recheck and a false break. And then once we got above it from that point, we just went higher in a very strong way.
Hmm.
And of course, every time we get to the major line, you can see we stall out. We stalled here, we stalled here, and now that's 1, 2. Here's the third one. This stall was, we didn't quite get in there and bump up against it and grind against it, but we are here. And you can see on pullbacks how these squares, as floors, how well they hold. And it held here. Here we had another different kind of a square working. So even though that looks like a lot, there was a lot going on. And this line 4150 is the line we were watching.
Hmm.
And anyway, the point is we're up at a top of a square, and just because we have a square, it doesn't mean the world ends. It just means we have to see how we're going to trade around it. Are we going to trade the counter trend back to the 50%, or did this entire thing expire and we're looking for a new leg? Or are we going to get on top and trade higher? Really, the weight of it, right? So when we look at these squares, now we're looking at the cash chart. You can see from the October low, I think actually this is September, the original low with the October false break, September low in 22, 720 calendar days coming up into this high, this period. And we're also 324 days from the low in October of last year, 766 from the high in August of 22. We're 112 from April, 45 from the August low, 66, 67 from high to high, and we're 30 days high to high over here. Now,
That's a lot of confluence.
it's a lot, but
Yeah.
the ones that really, really kind of, I would say frames the thing would be the 720, because that's
Yeah,
just
because that's 2 360 right there.
right. That's right. And this 45.
Hmm.
Now, a 45-degree move in time, making a new high. Now, if it didn't make a new high, I would, you guys know what I'm like, okay, well, it's here and there. We have to kind of watch the price action. But here we went ahead and made a new high. So that 45 counts. We went low to high 45. And at the same time, into that high, we have 66, 67, and 112. So all this stuff ties in together here. And you can see from the April low, which is the low that drove into this high, which is perfect diagonal. We got the 90 by 90 up here. And this is the one that clued us into this high. And, then we were looking for the low, and everything sort of unfolded from there. And even up until last week, last Friday's podcast, we were looking at the possibilities. Are we going to make a lower low and, roll over? Are we going to make some kind of a false break? And all of this talk is because this 5673 level, which is 90 degrees up from the low in April, valid, super legit low, mainly because, it all worked out. And we talked about all of this in the past episode. So anyway, so coming up into here, the reason we've been talking about it, but look, for a couple of months, we're really up in here every few days, right? Every couple of weeks, we're up visiting the same level. Now, when it does that, and here we have earlier last week we were talking about the triangle that was forming because we had a lower low and a higher low. So this week we took the the triangle out. The question now is, did he take it out in a false break or did he take it out for real? Now, if it was a real break, we'd actually break through this and land above 56.73, but we didn't. We're at 56.34. This is based on the cash chart, SPX. So it's not making it easy. Like there are little clues you can pick up on the price action and the chart that'll give you that last piece that you really need because it's really solid and it's proven its worth over time. So here it gives it like half and half. Yeah, we took it out, but we're not going to close above, right? We're going to close lower. And so
Yeah.
it's just not making it clear. And I think most of the time markets are like that. So what's the bottom line of all of this? The bottom line is, long as we're below 56.73 and barring some kind of a new spike that we go up and we reverse immediately, like you guys see on some of these events, we should technically be pressed. The sellers are sitting up here. Obviously, the sellers are sitting up here. Otherwise, why would it sell off every time we get there? This is the third time around, and they were there today, right? If the buyers were sitting there, we'd pull us up and swing us over the top into 56, above 56.73. So I think if we need to work with the bracket for tomorrow, I would say 56.73 is the level we want to sort of get above and hold above using the same sort of criteria and the language that we use, every week. And to the downside, I would say, because we kind of have a reversal bar in place, especially if we take out tomorrow, if we take out today's low, then we have to consider like, wait a minute, maybe that is a false break. And then we have to treat it that way, meaning we have to watch to see if the price action supports that. And when we get to the 30-minute, we'll talk about how we do it. But in general, if we take out 55.82, obviously this high is in place and, it should move a little lower rather than, just be all bullied up and run up into the next square.
And these
So
numbers are all
that's
cash.
my sort of the summary of that. Yeah, go ahead, Ben.
These numbers are all cash basis, correct?
Yes, this is the cash chart. I should put an SPX sign up
But
here.
the thing, Barry, that my summary would be that this FOMC meeting is very important, but not because of the hype that is, the press is doing or the, FinTwit is doing. It's really important because of all the geometry and timing that's coming in here.
That's right. Exactly. And I will share this with you guys. The last time when a Fed date and a bunch of cycles came together, that was back in October of 2023. So this low came in very clean. There was a Fed date right around there, right, Ben? October, yeah, the October.
Yeah. Yep.
So that was the last time, and here we are. It just so happens that they all kind of coincide. So we'll see what happens. And anything you want to add to that?
Nope. No, I just think that what's important to understand is there's hype around these events. This one is important because, as Barry showed you, the relationships in time and price that are occurring right now as the meeting's going to take place means the price action from here is going to be really indicative of a large move one way or another.
Right. So the argument was for the downside because of this little price action today. Now, tomorrow, obviously anything can happen. You can have a big outside reversal of the upside. So that's why we have the levels, right? 56.73 for the cash chart. And one other thing, we have a Gartley working here. We looked at that a little bit, but I want to show it to you guys. And this is the calendar chart, but it's okay. We can use Gartley some calendar just because we're just going off the price. So Ben, that's the Gartley target. All right. So it's just to say, okay, here we go. That's a little bit clearer, right?
Yep.
So we're looking at this and the upper end is 59.59 up there.
Right.
All right. 5,900 is sort of the ideal. I think that's the ABCD level. And so that's what we're dealing with. And if we already took out the high. So if it's, we took out the high of the B technically, but we're not settled above it. So this is also kind of work in the play. Now, I don't know if this is going to work out or not, but I'll tell you what, though, if we get above this 56.73, like we were talking about, then it certainly opens it up and we know we can at least get there, right? And
which is a nice move, obviously, from here.
Which is a nice move. And what I want to add to that is Now, the way Gartley's work is once, the target is hit, the actual trade is not even going into the Gartley. It's actually when the Gartley is set up,
Completed. Yeah.
completed, then you take the opposite trade, right?
Hmm.
So, but what on top of that, what I want to say is just using our squares, if we happen to settle above this through this news event, let's say we, wobble around Wednesday, Thursday, and we somehow end up settling above it. The thing is, we don't have to trade the event and act like, that's a big deal. The thing is, we'll have a lot more, we'll have a bunch of days to trade to the upside, at least getting up into 6,000. So,
Hmm.
there's room to the upside if we blow through this. And to make even a stronger case, when we have a lot of cycles like this, cycles are, like buses, right? There's always another one coming, but but the point is the big ones like 720, they don't, they don't come that often.
Right.
And the setups where you get the 45s, not that often blowing up into a high. So the thing to keep in mind here is, as powerful as a termination here with the false break would be, it would be equally powerful if we flip to the other side of the 90 and we start moving higher, right? Because that means there's a bigger cycle that's pulling it up, and that's going to continue. And that's what's happened in the past, and that's what's going to happen in the future. But the very cool thing, Ben, on this time around is the market is very close to one of these flipping decision points on an
Yep.
FOMC
Yeah.
event
Yeah.
date. So
Hmm.
that's why, we thought of doing this for talking about this for the sort of the midweek drop, just because it's not that often you get the square lines and dates and everything lined up with FOMC. And when they do,
It's
very
like
often,
gas on the fire.
yep. And when they do, more often than not, they work out in our favor, right?
The interesting thing too, Barry, is if we do blow through the 90 and sit on top of it, then you have a 180 coming up in the middle of October
That's right.
in time.
Yeah. Yeah.
Not the
Maybe the
yeah,
square
right
right
there.
here.
Yeah, yeah. That's possible, right?
That would be a hell of a move.
It
And
could
it could be,
blow off into that 180.
and that could be here also.
Could be the half square, yeah.
So there's a lot going on, but I would say we really want to watch this line, even to, trade the short term. While we're here, let's take a quick look at the 30-minute. So basically the 30-minute, we're caught and loaded because here's the 5720 that we've been talking about. There's a zone that I marked off a couple of days ago. And we, of course, went right up into it this morning and reversed. And where does it find support right above 5675. So going into tomorrow, we're right under this. So you guys can see the clue is if we can get above 5720, this is basically the 30, is like early warning, right? This is the canary. If you can get above that, and we take up 5740, we're ready to go. And if we get to 5800, the rest of it's going to get fulfilled because that false break and all of that business should happen in here if it's gonna happen. But if we start setting in motion in one direction, we know it's going higher.
Sure.
On the same token, 5720, if we mess around and somehow get below 5720 and start, taking out 5675, 5629, and not being able to, counter trends not being able to get above 5675, then it's tilted the other way. And the reason why that tilt this or that, either one is important here is because, like we saw on the daily chart, is that one of those decision points? Is that a very important square level? That's the only reason, right, Ben?
And we have the markers, and now you have the markers, so
Yes.
when it settles above, it's bullish. If it gets
Right.
stuck below, it'll be
Yeah.
bearish. And there's a lot of energy because of the cycles and the FOMC that are coinciding here. So
Exactly. So what that means is not a 1 day, 2 day trade. Once it
no,
turns here, it's going to go on
it's a
for a little.
trending
Yeah.
move. It's a trending move.
Yes, it can trend. It
Yep.
will trend because
Yep.
of the sort of the energy that's stuck in there.
Hmm.
So that's that. A quick look at a dollar. I think it's worth a shot. Here we talked about this 100.50 being support, and if it gets there, that we're gonna do a false break around the December low, and that would be expected. But this false break is really not a false break because false break would actually change the trend and move. So it's really kind of making lower lows, and that's very suspicious. So we had this 99.50 And right below that would be the 60-degree mark, which is, dollar likes to move in those degrees. So that would be 90, let's just say 99 even. If
Hmm.
we can dip into between 99 and 99.50, would also be doing a false break below this low in July, low of 23. And to me, if we can do that, that would bring a decent closure to this leg down, and we can expect the dollar to move higher. Whatever happens tomorrow on the event, let's see, because dollar would be affected to some degree, right, Ben?
Well, and the key thing that I hope we're getting the point across, doesn't matter what the Fed does, it matters what the price does on the chart.
Yeah.
It
Yeah.
matters of the levels, the important levels, and how price acts around them. And
Mm-hmm.
that determines what we do. Not whether they do 50 or 25 or nothing or 75 or what, whatever the hype that's out there. Just block out that noise, watch the chart, know the level.
Yeah. Watch the levels. It's a whole deal.
Hmm.
Let's take a quick look at crude. Now, here's how it pays off to watch levels. We were looking at another 60-degree move, and we had this 64.75 level a while back. If you guys watch the weekly show, we covered all this, and you can see how we tapped the square exactly, and now we're moving in the other direction. Ease a low in, like we talked about on the weekend. We talked about it. We're waiting to see what the next pullback looks like. And it might be that we get to 73.50 before we get some kind of a pullback. So anyway, it's a good example of a market that moved the entire square. Sure, it took, 4 squares to do it, but
Hmm.
but it was done, right? So we can call that some kind of a completion.
Sure.
Anything you want to add to the
No, just
okay.
like you said, watch the squares, watch the levels.
All right. And you're covering gold.
I'll do gold
Okay.
and I'll do NQs real quick.
All right. This is our requested chart list. We looked at these last Wednesday, so we'll just go through it quickly. These are weekly charts. And the important thing here is, the theme, right? So here we have the Russell, and what's important is 2367, that's 90 degrees up. We haven't gotten there. We're kind of in the middle, right? So just looking at it through the event lens, let's say FOMC lens, the odds are that we should go higher and finish this 90. It would
Hmm.
make sense to do that, and maybe even a little bit higher. But that's looks like this should move higher. Why? Because we're above. We sat above the 50% level for a long time. It's a weekly chart, so it seems like we should move. So this is tilted to the upside. Let's look at the 10-year. 10-year is so close to 117, which is the 90 degrees up from the low in October.
Hmm.
Again, so far it's been moving, and why not go all the way and
Finish it.
tap it and finish the trend. The other market we looked at last week was this is the daily chart.
Look how
And
beautiful that is, man.
yeah, yep, exactly. And this is exactly what I think I even said that, like, would expect to come in here and do a
False
false
break.
break and then
Yeah.
move higher.
Yeah.
And here we are, right? And this coming into this low is important, and it did it. And this is the kind of move you want to see following some kind of false break. So here's the thing, how the rates are going to affect the dollar and everything else. So here it looks like we already have a low in place. Now, just like the S&P, what else is right on a square, square line? It's the S&P, and USD yen is also, if we move the square up here, it's one square down. So again, is that one of the decision-making points? If it breaks to the up, if it continues to the upside, we have a lot more upside left. If we somehow take this low out and settle below this low, a 140 level, then, we have a lot more downside. Why? Because we're
Hmm.
at that one of those flipping levels,
Hmm.
right, Ben?
That's right.
And that's about it. These are the bankers, right?
Regional
This
banks.
regional
Yeah.
banks. Again, 60 would be 60 to 61 is resistance, and we got through the first square of 90. So it looks like it could go a little bit, a little bit higher. Now we did from the lower high, we did one square up. So we'll watch it. But looking at from the main low, it looks like we can go a little bit higher. Here are the junior miners doing pretty well. We cleared the 44 level, which is really sort of the balance point for now. So you can see square 72, we tapped it here, came back to 72 low to low and moving higher. So the odds are, we should move higher, especially since we're holding above 48.
Hmm.
Yeah, maybe barely, but look at that move yesterday, right? Uh,
Massive.
from 44, like very,
Hmm.
very strong. So let's see. But anyway, long as we're above 44, we're in pretty good shape. That's all I got. Did I miss anything?
I don't think so.
Okay, let me put it back to you. We're going to cover the NASDAQ and gold, two really important markets. So let me put it back to you. And if you guys like our work, please remember to like, subscribe, and share our videos. And also maybe put on for the alerts, because now we're putting these out at little bit different times, but on the same day. So alerts will definitely help you figure out as soon as we post it. All
Yeah.
right, Ben, what do we got? We did go above the square, almost to the 50%.
Right. I mean, the big number for tomorrow is 20,000.
Mm-hmm.
If we can't get above that, if we, get stuck under that, we're not going anywhere higher. But if we can sit on top of it, then we can challenge the all-time highs. The interesting thing about this though, Barry, is, NQs led us up, technology led us
Mm-hmm.
up, and look how far we are compared to the ES to the all-time highs.
Exactly.
So it's lagging. And that, that's a sign of like a market that's in transition, that if the generals, the things that we're leading are lagging, that's not good. That's, we're actually, we haven't even been able to put in the higher high yet, because this half
No.
square was the high.
And the triangle is fully intact.
Yep. It bears watching. There's timing. High to low was 45 there. So we did get a reaction off of that. The stuff that came in at the high was really good, like 60s, 135s, 180s. That high so far is really, really good. But the key for tomorrow is 20,000. If we really get some volatility going, it's got to get above 20,000 to keep the upside going. If it comes up, taps it, or can't even get to it and reverses, then the next important levels around, 19,160.
Yeah, yeah. And not even just go in. It really needs to hold above and just really trade above for a while,
Yeah.
you know. So
Yep.
yeah, this looks, yep.
It looks suspect. It
Yes,
looks
very
suspect.
much.
Let's quickly take a look at the weekly. So on the weekly, you can see we've basically been going sideways. We had this down move, one big up bar, and then we've basically been sideways in a pretty wide range.
Hmm.
So not making a tremendous amount of progress. I mean, we did what? One, two up bars, and then we had two down bars, and now we got two up bars. So it's basically running in place. And the most likely reason is, big cycles hit. We did a 90 and we did a 225, and that's weeks. So those are big until we get above the 20,000, which is, right about here on this chart. It's a suspect trend. On the weekly basis, like 18,150 is the 90 degrees up from that low in 2020, the COVID lows.
Hmm.
So if we get below that, then the next leg is starting, next leg down. Let's quickly jump over, because we don't want to run more than 30 minutes on this. Let's jump over and look at gold. So here's your daily on gold, banging around here for weeks, and then we finally took off. And look where we paused at the full square, 2620. So we want to see price clear 2620 to sort of open up the full square to move higher again.
Hmm.
And if we do clear that, we're up over 2,700 is next on a daily basis. To the downside, if they want to see any downside to get going, we got to get below this 2520. And then, then a correction could be likely to happen. Let's look at the weekly. Weekly's got a lot of interesting timing, and we blew through a lot of it too. So here was 216 high to high, which would be next week. So that's interesting.
Hmm.
45 from a high to high would be in mid-October. The reason why we're still running is we blew through this 45, we blew through this 90, and kept going. But here's another 90 that would take us into November. So if we can hold up and if we can keep going, there are other time counts that, sort of superseded and overwhelmed these other ones.
Hmm.
But here, the big thing on the downside is the 2540 is your half square. As long as we're above that, we should push to the full square, which is around 2630. You can see 2630 from the weekly, 2620 from the daily. Those are kind of triangulating as targets. Let's take a quick look at the monthly, and you can see we're moving nicely here. On a monthly basis, this half square is key right now, and that's around 2350. As long as we're above that, the monthly target, is almost 2800, 2770. So gold looks bullish. There is timing. We have to be wary of timing. And then we really got to watch structure. We got to watch the market structure because the market structure is going to lead us into the direction of, okay, hey, things are changing because we're starting to make lower highs and lower lows. And so we'll get that early warning signal. But right now, from a square standpoint, there doesn't appear to be a lot of risk, until we get stuck at that 2620, 2630 area. Anything you want to add on gold here?
Well, I think it's at a critical level. I'm just wondering if the weekly is doing a false break here, kind of a move,
Hmm.
meaning off of this, off of that 50% of the square, because
Right.
I had a square up there. So we'll see, but no, nothing much to add. We'll see how it settles after the news. So far, it looks like we should at least go up a little higher and on both charts, right? So
Absolutely. And to your point, we just missed hitting 360 up on the weekly. So it's a big
yeah,
number.
yeah,
And
yeah.
that's why I say this 26 here it's 2630, 2640 area is
Mhm.
pretty important. Could we spike there and then reverse? We have to watch it, but that is a possibility.
Yeah.
That's it on my end, Barry. We have a couple minutes left. Maybe you could give like your best minute and a half of something or of the psychology of approaching these events.
Well, it's just like you said in the intro. Basically, you just have to, over time, what you'll see is you just have to stick with what you trust and what you worked with and what you have seen in the past. These events are always coming. There's always another event or a news release or data release coming around the corner. And the best protection and security that you have, and the edge that you have is it would be in your toolbox and using that effectively, regardless of whatever numbers are coming out or the events or the chaos or the volatility. It doesn't matter how we label that. I think the key thing is you need to have a reliable tool set and a reliable approach you can use on a daily basis and have the odds in your favor.
And that's what the squares and the levels that get produced from the squares give you, because when price settles above or below important levels, the odds change on what's likely to happen next. And that's all we're doing is trying to play the odds, put
Exactly.
them in our favor. Anyway, so that's it for this week. Hope you enjoyed the show. Please like, subscribe, share the links, ring the bell, set up the alerts, help us grow the channel. You guys have been doing a great job helping us do that this year, and we'd like to continue. So thanks, everybody. And we will talk to you on Saturday next with the weekly show. Great job, Barry.
Thanks, Ben. Good job. We'll talk to you later. Bye
All
bye.
right.